All right. Hi, everyone, and welcome back as well. And hello to our new viewers too. So this is the daily currency call with Forex Trading Asia. And thanks to everyone for joining us again. And a big welcome as well to the new viewers too, or the new listeners, depending on how you're following this podcast. So quick intro, this is episode 380 and it's the 22nd of September. And we do this currency call every Monday to Friday at 11 a.m. GMT plus 8, and the currencies we analyze are as follows. Mondays, we do the Aussie and Kiwi. On Tuesday, the Euro. Wednesday, Pound. Thursday, Yen and Gold. And Friday, CAD and crypto, specifically Ethereum and Bitcoin. So this is the currency call where you'll get market economic updates, key support and resistance levels, trade ideas, and much more. This currency call is going to be very beneficial to the long-term investors and the short-term traders too. And here we will go through what could move prices, the potential possible trade ideas, and also highlight potential targets and the risks. Also, a disclaimer, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis before entering any trades. So it is, guys, it is Wednesday. And just to start the call off, we've got Kim Hong here, currency strategist, just going through the recent Bank of Japan meeting and just highlighting what was said and what it means for any trades that could be on the horizon. So over to you now, Kim Hong.
All right, thank you, Scott. Happy Wednesday. Before I get started, happy birthday to Wee Junwei, the co-host of this call, okay? Yep, it's his birthday. Okay, now back to BOJ. So I think it was around like 10 minutes ago that the Bank of Japan just released their monetary policy decision, okay, announcement. So basically they held monetary policy unchanged, okay, interest rate unchanged at negative 0.1%. QE continues at whatever amount they were purchasing previously for the Japanese government bonds and so on and so forth. Okay, so basically nothing special, nothing new coming out from the Bank of Japan. Okay, the next meeting next month, okay, may be a little bit more, I would say, interesting. Okay, because that is when the central bank will be providing their economic outlook, which is something like the projection materials that the Fed will be releasing this time around, or some quarterly outlook, even providing us with their forecast, okay, economic forecast. So yeah, for now we'll just have to see how it goes, and yeah, just take it as it is from the Bank of Japan. All right, so that is for the Bank of Japan. Now, moving on to something more interesting, all right, we have the US Federal Reserve, okay, that will be announcing the monetary policy decision, okay, tomorrow at 0200 GMT plus 8, okay. So what to expect? This time around, the focus will be on QE tapering, okay. Specifically, will the Federal Reserve be announcing a QE tapering, okay? Personally, I don't think the Fed is going to be announcing a QE tapering. All right. Instead, the Fed may deliver a hawkish note, okay, similar to the one that Jerome Powell made back in the August Jackson Hole Symposium. Okay. So what did he say previously that made his speech to be hawkish? Okay. So he mentioned this. I quote, substantial further progress test. Okay, the substantial further progress test has been met for inflation. There has also been clear progress toward maximum employment. Okay, so that was what he said back in the symposium. All right, this time around, yeah, I'll expect the central bank to actually reiterate something along the line of this as well. Okay, because I mean it's the fact, right? We have been seeing from the releases of non-farm payroll data, okay, it has been strong up until the most recent one, okay? Inflation has been strong up until the recent one as well, okay? So that brings me to the next point. why is it that the Fed, okay, is unlikely going to announce QE tapering, knowing that Jerome Powell has already said that, that the central bank is actually expecting a QE tapering to take place in 2021, okay, by the end of this year, okay? Well, basically it's because of, first of all, it's because of the disappointing jobs report, okay? 235,000 jobs were being created in the US for the month of August, as opposed to the 720,000 jobs forecast, okay? So it's just like a 33% of the, of what was being forecasted. So that is the first point. Second point being the recent slowdown in inflation. Okay, I think it was like 0.3%. Okay, increase in inflation back in August on a monthly basis. All right. Yeah. Although in terms of annual inflation, okay, the data is still way above the central bank's target. So another comment made by Jerome Powell back in the symposium will actually, give us a clearer understanding of why these two pieces of economic data may actually put the central bank on hold for a little while, okay, for in terms of announcing QE tapering, okay. So once again, I quote, he said this, I quote, "We have much ground to cover to reach maximum employment, and time will tell whether we have reached 2% inflation on a sustainable basis." Okay, so as we already know, okay, the Fed's dual mandate, maximum employment and price stability, which is referring to inflation, okay, are the main goals, okay, of the central bank. All right, so employment wise, they have a long way to go, okay, before they reach maximum employment. Inflation wise, okay, yes, there may be strong inflation, coming in previously, okay, prior to the August data, okay, but what they want to see, what the central bank wants to see is that inflation will be sustainable, okay, not just like a few months of spikes and high inflation. They want it to be sustainable across the projected horizon, okay, the projection horizon, okay. So yeah, these two, the most recent release of the employment figure and the inflation figure may actually put the central bank on hold, okay, in terms of making an announcement on QE tapering. Now, another reason, okay, a third reason, all right, a third reason that I personally feel may actually add on to what I've said just now, okay, is that it may actually be worth it for the central bank to delay their tapering announcement by 1 month. By one more meeting, okay, because the next meeting will be held in November, which is around 2 months from now. Now, in these 2 months, the central bank will be receiving 2 more jobs report and 2 more inflation reports, okay? So that will actually give the central bank, way better view, way clearer view of whether, a QE tapering in 2021 is warranted, okay? Now, if they were to make an announcement, a tapering announcement in November, then tapering is likely going to start in December, right? Okay, so they will still be able to get in time for to justify the tapering in 2021 to take place, okay? Okay, there's another thing is that for non-farm payrolls data, all right, the jobs report, based on historical data, okay, there's usually a significant revision, okay, to the number of jobs being added, number of jobs being created, okay? This is because data collection tends to be a bit, I would say, due to tons of discrepancies, okay, in the month of August, because of people going for summer vacations, okay, that actually, can actually lead to substantial revision. Now, if the data were to be revised upwards, okay, the August figure were to be revised upwards, then of course that will be, adding to that will be strengthening the Fed's conviction, for a tapering this year, right? I mean, for the month of July, we have seen an upwards revision in data. I think it was 900 over 1,000 jobs being revised upwards to 1 million. Even for the month of June, we also see like a decent amount of upwards revision. So if we were to see another round of upwards revision for the August figure, then things may not be as bad as it seems. So because of all these reasons, the Fed can afford to wait for one more meeting, all right, for the November's meeting before deciding, if an official tapering announcement should be made and should be started in December. Now that is for the tapering side of things. Also take note that the quarterly economic projection materials will be released. What to pay attention to. Now, although we are paying attention to although the main focus this time around will be on QE tapering, but also note that interest rate hike is important. Yes, we are not going to be expecting interest rate hike anytime soon, but we would like to pay attention to the dot plot that comes with the projection materials. Let me show you how it looks like. So this is the Federal Reserve page. I'm just going to paste this link later on. So you guys can know where to look for the statement and things like that. So if you guys are staying up for the FOMC meeting later on, tomorrow at 2 a.m. All right, then come down to September. Come down to September, and at 2 GMT plus 8, they will actually release, and then you can click on the PDF, the stick, HTML, and things like that. All right. For readability issue, for the statement, you guys may want to opt for the HTML version instead. It's easier to read. For the projection materials, I would prefer you guys to go for the PDF version, because the PDF version will show you what I'll be showing you at the moment. The dot plot, which will not be clearly displayed for the HTML version. All right. So if you were to click on the PDF version for September, all right, later on you guys will be clicking on the September version. You guys will be seeing the PDF being loaded. All right. Wow, that's long. So summary of economic projections. Now, dot plot. You can just scroll all the way down until you see, I think I missed it. Yes, this is the one. It's the only page, in the projection material that has tons of dots, on this plot called the dot plot, all right? So what this shows is basically, for 2021, just zoom in another, for 2021, for 2022, 2023, and the longer run, long term, how many members are actually expecting interest rate to be at the respective level based on the axis? 0%, 0.5%, 1%, 1.5%, 2%, so on and so forth. So what happened previously in June, during the release of the projection materials, is that there were actually many people, there were actually many committee members who actually voted for, well, not voted, but projected that interest rates will be higher, in 2022 and 2023. There was a shift. So previously, I think there was somewhere around 14 or 15 dots, 14 or 15 dots around this region, which right now you are looking at only 5 dots, So that was actually, that implies that, about 14 to 15 members of the committee members are actually expecting interest rate to be less than, or equals to 0.25%, in 2023. That was previously. Then in June, we are seeing only 5 dots. The rest actually shifted higher. So that means there's an expectation. There's an expectation that interest rates will be higher in 2023. So this time around, during the meeting, when the projection materials is being released, this is what we want to pay attention to. Will there be any further shift from, from bottom to from somewhere at the bottom to somewhere higher, okay, which is, I would say, which translates to a more hawkish view coming from the central bank? Or will there be a downwards shift, okay, of the dots somewhere around here, okay, to the first row over here, okay, which will translate to a more dovish view coming from the members, okay? But that's for 2023. Look at 2022, okay, with tapering talks going on, tapering may take place this year and things like that. Somehow the market has already been focused, okay, the focus of interest rate hikes has already been carried forward to 2022, okay? Right now we are seeing, I can't count, okay, this is just too many dots over here, okay? Right now we are seeing like more than 10 dots, indicating that more than 10 members are actually expecting interest rates to be less than or equals to 0.25% in 2022. Wow, there's only like 7 members expecting interest rates to be higher than that level, okay? If we were to see a shift from here, okay, to anywhere above, okay, then chances are we will be seeing a more hawkish Fed, okay? The Fed will be delivering a more hawkish tone, okay? So that is for the projection materials, okay? And another thing that the projection materials will come with, okay, is the economic projections, okay? Will the central bank be revising, okay, the GDP projections, inflation projections, employment projections, specifically unemployment rates, okay, upwards or downwards? That will also correspond to whether the central bank is hawkish, okay, or dovish. Of course, upwards revision in inflation and GDP translates to being more hawkish, okay, and a downwards revision to unemployment rate translates to more hawkish as well, okay, vice versa, all right? So two things to pay attention to when it comes to the projection materials, okay? Yeah, if you guys are trading this FOMC meeting, just take note, it's very, very likely that volatility will come from all directions, okay? Especially at 0230 GMT plus 8, just 30 minutes after the release of the announcement, because Jerome Powell will be speaking at a press conference. If any changes were being made, anything on QE tapering has been announced, then likely that the journalists, okay, the reporters will be probing into why such decisions will be made and things like that, okay? Why is the central bank sending out these messages and things like that? Even if the central bank were not to say anything, okay? If let's say, suppose the central bank were to say that we're just going to adopt the wait and see approach, okay? First, no tapering announcement will be made this time around, all right? Then, expect reporters to be grilling Powell on why. You guys are expecting QE tapering to take place this year, okay? Do you guys think that, you guys can make it in time for a tapering this year? And if not, when will the first tapering be taking place, okay? So such questions, answers to such questions will definitely lead to volatility in the market, okay, in USD, maybe even for the yen pairs, okay, because as we know, when we trade yen, it's more of a safe haven currencies, okay? So whatever decision, whatever words, sentence, meaning, messages coming out from the Jerome Powell's mouth will actually, lead to a change in market sentiment, okay? So with that, let me check if there's any questions. Rents. How will Evergrande situation affect TG? Sorry, what's TG again? Can somebody guide me on what's TG? Trading. Okay. Anyway, basically, how will Evergrande situation affect the market? Okay. I'm not sure if you guys actually, I think it was a couple of hours ago that there was a news on Evergrande, breaking news being released that Evergrande will actually be paying interest back to whoever they owe interest to, okay? starting from tomorrow. Okay, and so there is actually an ongoing negotiation with the debtors, okay, on how much interest should be paid and things like that. Okay, so that was actually a positive, okay, optimistic, I would say view, okay, maybe news, okay, breaking news, optimistic breaking news coming out from the news agency. Okay, so that actually led to if you guys look at a chart, okay, it actually led to a strengthening in currencies, okay, against the safe haven currencies such as the Japanese yen, Switzerland francs, and the US dollar. Specifically, okay, Australian dollar, okay, because like I've mentioned, I think I talked about it yesterday or a couple of days ago, that there's a direct relation to what goes down in Evergrande, okay, to how the Australian dollar will respond, okay, because of the whole iron ore issue, okay, this whole Evergrande issue leading to property markets having in China, okay, property markets in China getting affected, then that may actually lead to a lower, or construction activities in China. All right, hence lower demand of steel. Hence, we need iron ore to manufacture steel. Okay, lower demand of steel will lead to lower demand of iron ore, and we know that Australia is the largest exporter of iron ore, and China is the largest importer of iron ore. Okay, so this whole issue will roll and roll and roll, eventually leading to a decline in revenue in Australia. Okay, coming from the exporting of iron ore to China. Okay, so if you guys want to trade this whole thing, then well, personally, I'll pay attention to Australian dollar. Okay, because it is directly impacting Australian dollar, right? So with this good news coming in, we may be seeing a short-term strengthening of the Australian dollar. Personally, I wouldn't trade it, all right, because I'm not sure what's going to happen tomorrow. Nothing to do with the FOMC, but it's more like, is there going to be any more change to the Evergrande saga, the Evergrande drama and things like that? Are they going to say like, what, we are just going to hold back on the payment of interest rates, interest to the debtors? Okay, if they're going to do something like that, then we are likely going to see another weakening of the Australian dollar. Okay, so I think I went a bit off track. So yeah, if you guys are trading the FOMC later on at 0-200, just pay attention. It's going to be a roller coaster. It's going to be a roller coaster. All right. So with that, I'll update you guys again tomorrow. Yeah, tomorrow on what went down, what will happen. Okay, during the FOMC meeting. Okay. With that, I will hand it back to Scott.
All right. Thanks for that, Kim Hong, as well. And remember, everyone, the YouTube channel, I have posted a link for that. You can feel free to watch the replay of the currency call as well, just in case you didn't catch everything that was discussed with the upcoming FOMC meeting as well, which is going to be definitely a nice driver for currencies. Now, obviously, the US dollar is in focus here for me now. So what I'll just briefly do, I'll bring the chart up thanks to Sam Trade. So we have seen the US dollar consolidate a little bit after it did have its run higher. And, we nearly got back to 93.50. We did see a pullback after the situation with Evergrande was, I guess, accepted by markets. And it just seems that the situation is not as chaotic as first expected. And we are seeing the US dollar bounce off 93 and we're back to around 93.20. And most likely what we'll see is just sideways markets until we get that FOMC, especially the minutes in regards to the economic projections. And Kim Hong went into detail about what specifically to pay attention to with that release with the dot plot. So definitely check out the replay as well, just to prepare yourself for the upcoming trades that are on offer. But from a perspective of the US dollar, as it holds above 93 here, I would say, sit and wait on what is said with that FOMC meeting as well. There is a few other factors going on that have sort of thrown a spanner in the works in regards to the COVID situation seems to be calming down, but definitely just pay attention to what is mentioned with that time frame on tapering as well, because that's going to be a big driver on what happens with the US dollar. So definitely stay cautious though. Remember that we don't have much more time until it's released. And then once we get some clarity, trades can be taken with a bit more conviction as well. So again, it's looking like it might just be a neutral meeting, but it's best not to anticipate things and just see how it all plays out as well. We saw things calming down in equities as well. And in fact, the iron ore price is up a little bit. I'll just quickly show that here, guys. This is the price quoted from China as well. That's in Chinese yuan. I'll send the link out here as well. Besides Forex, I actively trade a ASX miner as well, and it's up a lot today. So that's great news. I think Jin holds the stock as well. So happy days for us. I think it's up nearly 5%. So it looks like maybe the bottom's in potentially on iron ore. And, if there was more panic, we could fall even lower, and we haven't done that. So for me right now, the risk currencies are on watch for, maybe a lift high, but it's hard going in FOMC. So just, be patient and wait for some more information. But guys, that is my thoughts on the US dollar. So it is Wednesday already as well, and we do have Jin here. The pound has got quite a bit going on for it as well. So definitely it's worth paying attention to this. We've got Jin now, multi-million-dollar trader here, just going through the pound and economic news and any potential trade ideas as well that are on. Over to you now, Jin.
Thanks, Scott. It is Wednesday already. Where has the week gone? Hi, everyone. So let's go through the pound dollar. Let's look at the news first. Kim Hong and Scott has gone through in a lot of detail what could happen with the FOMC, the way the dollar index has been performing or could be performing as well. The main focus, looking here at the Forex Trading Asia economic calendar here, is that as we scroll up, being on Wednesday here, we just had the BOJ, not a big surprise there. Following on from that, the main focus is, I don't think we're going to see a lot of movements from now. I do hope that we see the movements, but we're not going to see a lot of movements from now till FOMC tomorrow morning or later tonight, where we have the rate statements, decision, and press conference to be released. At this point, from what the guys were sharing, my view is that we could see some strength continuing on for the dollar for several reasons. One is that it looks like data might be a bit better. They might be a little bit more positive, despite saying that it's transitionary, despite saying that they want to see it being applied for the longer term. I think that there will be some positivity from this news. And also with the questions in the chat, with the Evergrande problem happening right now, is that we could see that move towards reserve. Markets are dropping a little bit. We're seeing that strength to the US dollar. We're seeing some strength towards the yen as well. With that move towards reserve, this could amplify together with the FOMC news to be released later tonight or early tomorrow morning. But the main focus for the pound dollar, I think that all that movement is also going to be hinged upon, one, the PMI numbers for the UK. Manufacturing PMI expected to go from a 60.3 to a 59. Services PMI looking to move a little bit, but I'm not too keen. I don't think this will move too much. The main focus will be this. At 1900 hours, GMT +8, we do have the rates voting. I think that they're going to stay at an unchanged, but QE with it at 875 billion is probably going to stay at unchanged as well. But with no change coming from the BOE, this could actually signify some little bit of positivity, coming from the UK, coming from the Bank of England. From that, we do have no other news for the rest of the week for the UK. So what this actually could translate to in terms of the charts here, looking at the pound dollar on the H4 time frame, I think that we're likely to see, one, before everything happens, the FOMC news to be released at early tomorrow morning. So I think that we could actually see that dollar strength coming and being applied towards, for it to drop towards the 1.3588 support level. Same as what happened 1, 2, 3, 4 weeks ago, where it came down to that support level before bouncing back up. I think this might actually repeat again. I think that we might see it sit across, drop a little bit. So sit across for today, drop because of the dollar strength, drop because of that move towards reserve. And then as we see the pound, the Bank of England news, that possible positivity coming around, I think that we could see it bounce off this support level back up towards that few resistance levels. So what I would be looking for here in this case will be for that drop, do nothing during that drop, but for it to react towards this 1.3588 support level. If it does react to this level, I could be looking for buying opportunities above 1.36. So looking for buying opportunities above 1.36, you'll be looking at a very tight stop loss of about 30 pips. First take profit level 60, next take profit level maybe 120. You're looking at a 1:2 and a 1:4 risk reward ratio towards that upside. So a lot of waiting before the news, to let it drop, that patience, that discipline, to let it drop first, maybe that 50, 60 pips for it to bounce back up before looking for that buying opportunity back up towards that upside. And if we do see the pound dollar drop before bouncing back up, what's likely to happen here on the euro pound is that this will become a bit invalid, because if the pound dollar does drop, then we're likely to see the euro pound test higher. So this might actually be a better setup where it tests higher, break above the 8590 level before tracking back down again. So it's an inverse of the way the pound dollar is likely to move. With this inverse, you could have a better selling opportunity below 8585. You would have a very tight stop loss of previous high at about 20 pips, a take profit level of a good 40 pips. You're still looking at a 1:2 risk reward ratio for the downside back towards that 8538 level. So with that said, I think that we are going to see a lot more volatility across all currency pairs, driven because of the uncertainty in the Chinese market because of Evergrande. We could see the uncertainty being applied because of a lot of movements in towards reserve and also towards that security. And with all that, if the central bankers do come up with any surprises, we're going to see volatility from that point. So my approach with the markets for now will be very short term, short to medium term. I would look to secure profits as quickly as I can before getting into another trade. Main thing right now is don't overexpose yourself in terms of number of trades. Don't overexpose yourself in terms of over expecting the potential profits. Realize the profit, close it out, and then reevaluate again. Keep it short, keep it sharp, make some money out of it. So with that, I'll pass it back to you, Scott.
All right, thanks for that, Jin, as well. And just in the chat, guys, we've got the trade ideas as well, just for your consideration too. But again, if you are watching this and you need a replay, it is on the YouTube channel as well, and I'll send that link again into the chat, just as a very helpful resource. We have the trade ideas that are broken down as well, so you can revisit those. You can see the key levels that are actually called out and actually get a really good idea of what's going on. So your charts can reflect what's shown, just so that you're in line with what we're seeing, so you can actually get in at the right time, because that can be a very key thing. If you miss a setup and then you're chasing it, and it can be quite a frustrating aspect of being in the markets. But what we have up next, guys, and also happy birthday to John Wee too. I didn't say that, so everyone else did. I did write it, but I'll say it now. So now we've got Daniel here, the senior trading coach at LCMS Traders, and he'll just be discussing the upcoming live trading call that we've got tonight, 9 p.m. GMT+8. and just a bit of a preview of that, and also some more detail on our private group, the LCMS Traders Club. So over to you now, Daniel.
Okay, thank you, Scott. Okay, yeah, so for those who are new here, every Monday and Wednesdays, we have a group coaching session. So Monday at 8 p.m., we have a group coaching sessions where we see what's happening last week, what's happening this week, and talk about possible trade setups, what are trade ideas based on the fundamentals and looking at the technicals as well. Now, tonight at 9 p.m., we have our live trading sessions. Live trading sessions were held at 9 p.m. GMT +8 is because it is the US market open. Of course, even though maybe expected to be a quite slow market tonight because of the FOMC happening at 2 a.m. on Thursday morning, but there are possibly some possible trades, scalping trades, or even a swing trade to be taken. And we'll discuss about the trade ideas, more trade ideas as well. Like just like Monday, why it's important? Because Monday, we had about five or six trade ideas. 2 already has been activated, already triggered. So it's something really useful for anybody who's into trading, right? So please come and join us there. So so do come and join us tonight at 9 p.m. GMT +8. So for those who are not already a club member here, all you need to do, just let me share it here. Okay. Let me share it here. All you need to do is just to join us right here at tradersclub.lcms.com.sg. Coming in really fantastic place. Not only we have group coaching sessions here, we have Forex signals, analysis of the Forex signals, trading ideas. Kim Hong also put in the long-term trade ideas. Scott will give his summaries and also trade ideas, and anyone from the coaches here will give you the short-term or medium-term trade ideas in the trading chat as well. So it's going to be very beneficial to anyone who's trading, and you have to join if you want to be profitable, right? So all you need to do is just continue to scroll it down, and it's only for $49 a month. This is without a doubt the least you must do. So join us right now, and I'll see you tonight at 9 p.m. the live trading sessions. Scott.
All right, thanks so much for that, Daniel. And also just one final link as well. If you haven't already, please click the link to nominate the LCMS Traders Club as the best educational community. That would be much appreciated as well. And if you haven't already and you're looking for a managed account service as well, got one final link here. Please feel free to explore our website at ForexBriefcase.com, and that will take you just through what we do from a managed account service perspective, our fully verified track record as well. And you can find that on ForexBriefcase.com. And I've got the website right here as well. We're actually just about to crack 100% returns in 3 years as well. So well worth checking it out, putting your details in, and we'll get back to you straight away on that. But thanks for watching, everyone. And I hope everyone